and a very warm welcome to this week's REDF Saudi Housing Finance live stream. My name is Richard Banks, and I'm the live stream editor at Euromoney, in case you didn't know. And I'm joined today by three distinguished participants in the Saudi mortgage market for an in-depth discussion to follow on from the discussion we had with the Housing Ministry last week, specifically looking at mortgages. Tarek and Man, could you put your sound on, please? You're both still on mute. But I'd like to start by welcoming my guests. And I will start with Tarek. So we have Tarek Al-Musharraf, who is Chief of Financial Sustainability at REDF. Tarek, a very good afternoon and a warm welcome to you. Could you just tell us a little bit about what it means to be the Chief of Financial Sustainability at REDF? What's your job and responsibilities?
Well, good afternoon. And first of all, I'd like to thank you and thank His Excellence for his patronage, and thank the General Director of REDF for nominating me to represent REDF, the audience, my fellow panelists, and obviously you and Euromoney for your organization of this event. Now, let me start with what we do in REDF, and then I'll go a little down to my role. In alignment with the Vision 2030 and under the pillar of vibrant society, home ownership is one of the key drivers to having a vibrant society. Before 2017, REDF had operated for about 40 years and has supported 800,000 individuals or citizens gain home financing. Post 2017, in under 4 years, we've managed to provide home financing to about 360,000. We've changed our approach in REDF because we wanted to be in line with the ambitions of Vision 2030. Now, when it comes to what I do specifically, I'm in charge of making sure that REDF is financially sustainable. What this entails is that we have to have inflows to cover our requirements and outflow, which is mainly the mortgage subsidy.
Mm-hmm. What are the inflows? Where do your inflows come from?
Our main inflow would be a legacy portfolio that has been accumulated by loans that have been issued years and years ago using the old routine. Mm-hmm. Our other main inflow would be the returns of our investments.
And is REDF currently financially sustainable, or if not, what's the sort of track? When do you think it will be?
We are financially sustainable in terms of balancing our ins and outs, obviously, and we aspire to be even more sustainable by being able to provide new, innovative sources of income to help support more citizens in their quest for home ownership.
Fantastic. Well, we'll unpack a lot of that as we go on. My next guest this afternoon is Mr. Man Al-Khamus, who is Consumer Banking Head at Samba. Man, a very warm welcome to the live stream. Tell us a little bit about what you do at Samba, and particularly the role that mortgages play in that.
Thank you very much, Richard. Very good afternoon to you and to all the guests and my fellow panelists. The role of Samba, we are one of the banks that is participating in the mortgage business in the kingdom, and we are supporting the Vision 2030. We all have an ultimate goal to see 70% of our Saudi citizens own their houses. Now we are at the range of 50%. So in the next few years, in the next 10 years or so, or less than 10 years, we want to see that to 70% ownership. And this is one of the key pillars of the Vision 2030. Banks have great relationship with REDF, Ministry of Housing and SRC. We work hand in hand with them. Before, REDF used to originate, collect, and do the whole process to grant the citizens their loans or their mortgages. In the last few years, they have changed this system, and they are working in partnership with banks. Therefore, the numbers have jumped significantly, as highlighted by my fellow panelist, Mr. Tariq from REDF.
And who is responsible for the underwriting? I mean, who makes the credit decision? Is that the bank, or is it somehow related to REDF?
Banks have its own internal policy, and we have the policy from SAMA, which is the DBR, the debit ratio. And we have something called the responsible lending. So we have several several things that to take a look at when it comes to credit scoring. So we don't grant the loan for a citizen who cannot pay back, because you are at the end, you want to provide the citizen with a house that he can pay off in 20 years or 25 years. So we follow these rules.
Excellent. As again, we'll talk a lot more about that as we continue. And last but by no means least, my other guest today is Fabrice Sassini, who is the Chief Executive Officer of the Saudi Real Estate Refinance Company, shortened usually to SRC. Fabrice, welcome once again to well, this time a virtual Euromoney panel. We've done this a number of times before. Briefly, because we're going to talk a lot about it as we go forward, just tell us a little bit about who SRC are and perhaps some of the things that have, the milestones you've achieved this year, because I know there's been quite a lot going on.
Thank you, Richard. Welcome. I'm proud and glad to be with my distinguished panelists, and would like to welcome the 130 participants to this call. So just a few words on the background of SRC quickly. First, as you may know, we are the new kid on the block. So we are a small startup compared to well-established institutions like REDF or Samba. We've been created in 2017 to emulate what Fannie, Freddie, or Chagamas or CMHC are bringing to the mortgage market in their respective countries. So being the refinancing company in charge of liquefying or monetizing the mortgages so that primary lender can keep originating without having at the back of their head any questions or issues around liquidity, ratios, risk management, asset and balance sheet deployment, and so on. We are licensed by SAMA, and we are fully owned by PIF. The second thing which is important to underline regarding SRC, because sometimes we are seen as a competitor of the bank or a competitor of the mortgage finance company or a new venture among others that is supervised by PIF. Actually, SRC is fully part of the housing ecosystem. So when you think about it, the housing ecosystem in the kingdom, and I think it's something we need to put to the credit of the government, the leadership of His Excellency. When the process was devised, they look at it from a very holistic view. So there is an element of supply through a PPP and through an agency close to MOH, which is coordinating this effort. There is a great deal of initiatives that are organized under REDF, and we come at the end of the process, once the supply is there, some elements of subsidy, guarantee, support of borrowers have been implemented. We come at the end of the process to make sure that liquidity can flow back to the originators and therefore to the borrowers. So we are part of a full system. And the last thing about SRC, perhaps to dispel sometimes some confusion, we are a private company. As I said, fully owned by PIF. At the same time, we are also a tool of public policy. So we are pursuing in our activity and day-to-day business a combination of objectives. we have, like my friend Tarek at REDF, we have to ensure that we are sustainable. That means that our ins are equating as much as possible our outs, otherwise we will have to stop our activity. But at the same time, we are pursuing objectives that are a bit bigger and to a certain extent, almost more important than just looking at the bottom line in terms of encouraging the development of the primary market, in terms of encouraging affordability, aligning what we do with the strategic objectives pursued by the Ministry of Housing. So we have, to a certain extent, one foot in each world. On the, I would say, private side as a normal financial company. But at the same time, we are also looking at more significant and public policy objectives that we have to contribute to. In terms of milestones in 2019, I will just give you a number, and probably we will have other opportunity to discuss numbers later on. We closed our 2019 exercise with a total balance sheet deployment that was around 2.2 billion. We are at the moment at 6.2 billion deployments. So within 9 months, but factoring obviously the COVID slowdown and so on, we have tripled our balance sheet. So it's in itself a milestone. And there are, alongside this milestone, a couple of other elements. So as you know, we closed the transaction with the PPA, the pension, public pension agency, for the transfer of a portfolio. That was the biggest transfer of portfolio performed in the kingdom for around 3 billion SAR. So that was another milestone showing the size, the diversification we can address in terms of originators. And there are a couple of other projects we are working on, but to maintain the suspense, I will leave it to
let's keep something back for the end or halfway through. Okay, so thank you all very much. I mean, we've covered a lot of ground already, and we haven't even got past the introductions. But I want to pick up on something. Actually, before I do pick on this, I want to say something. We've already got some fantastic questions. For those of you who are watching the live stream last week with the ministers and the deputy ministers, I have a list of the questions that were asked last week. We are going to get them. We're going to answer as many of your questions as we possibly can. We're addressing them to the right people. But do keep asking. Ayub, ML, Abdul Rahman, all good questions. I've got them up on my screen. I'm watching them. Don't worry, we will get to them. But before we sort of do that, Tarek, I want to come to you, but I also want to ask the other two. Yesterday, it was announced that there was a change in VAT on the purchase of housing in Saudi Arabia, scrapped at some levels. There was an exemption now. The threshold has been moved from 850,000 riyals to 1 million riyals. Tarek, perhaps you could just tell us a little bit about what you think that is, how it works, and what it's going to mean for the market. A good thing, I think.
Yes. Well, one of the biggest challenges when it comes to buying a house is obviously the cost of the house, affordability. Yeah. With the VAT change from 5 to 15%, this would mean an increased cost when you want to buy a house. So a very generous and thoughtful royal decree obviously has come out to say that there is an exemption. Well, first of all, I believe that the VAT on real estate dealings would go down to 5%, and citizens purchasing their first home would get a waiver of the VAT to up to 1 million riyals, as in 1 million as the purchase price.
Yeah.
So that's about 50,000 basically if you compute it.
Yeah, and that's a significant, I mean, that's the deposit basically, or a big
Exactly.
chunk of the deposit anyway. I mean, it's a meaningful amount of money. Maan, do you agree that this is net positive for the market?
Absolutely. As mentioned by my colleague, Mr. Tariq, it's very positive, and it's been taken very positive in the market. We see the size of the untapped mortgage potential in Saudi Arabia currently stands at $500 billion riyals, which is about $133 billion. And around 1.2 million homes are expected to be built from 2020 to 2030. So that tells you an idea about the market and the future going forward. So now the citizens, if they get a waiver from 850 to $1 million, and they will be reducing the cost of 10%, we will see more people purchasing their houses going forward.
Great. Fabrice, I very quickly, it's not exactly, you're a little bit sort of back from the front line, as it were, but positive, shows that the government, the policymakers understand they need to support this market.
Well, very selfishly, I would say that anything that helps the primary market will help us at the end of the day or fulfill our objectives. So yeah, it's obviously positive. I would just say, add one word. I think beyond the measure itself and the announcement, it shows the consistency of the support provided to the housing program and development since its launch in 2016, 2017. I mean, all the measures, all the actions taken are going in the same direction, and regardless of let's say, how the economy is faring and the hiccups we have experienced over the past few months, there is a great deal of consistency in the decision and the measures taken. And I think that creates, beyond the measure itself, that creates visibility and confidence.
Thank you. I agree with that. It's remarkable. Tarek, over to you now. I'm going to sort of put you two things and ask you to respond to them. Okay. When this program, when this new strategy for the development of REDF and for housing in the kingdom was launched in 2016, 2017, there was a degree of skepticism. I'm sure you remember it. I wasn't a super skeptic, but it was unproven as to whether these ambitious targets could be met. And then there was a second sort of wave of skepticism in March this year when he said, well, you know, the pandemic is here, everything is going to slow to a halt and nothing is going to happen. And, you know, the progress that we've made so far is going to be derailed. Now, I'm sure you have some numbers that will tell me that's not the case. So please talk to up to the beginning of this year or up to March about the progress that had been made quickly, and then tell us what's happened during the course of 2020 at REDF and particularly in the wider mortgage market.
Well, let me start by putting some context though. In 2017 or 2016, you would see a total number of mortgage contracts of under 20,000 a year. This year alone, and we're not finished with the year, I believe we are over 160,000 contracts. This means basically about 100 billion worth of principal has been extended. I believe that there was a minor hiccup, but then what is a hiccup? It's very relative. The hiccup is a bad month in March and April, but that month is pretty much equal to the whole year of 2016.
Okay, that's a good perspective.
Yeah. So, I mean, as my colleague just said, and as Ma'an said, the potential is great. The area for growth is even better. And I think now the future is, as Fabrice said, anything that helps the secondary market will help anything that helps the primary market will help the secondary market. Now that we have a sizable primary market, the secondary market needs to expand within the same level of growth to ensure that there's a sustainable amount of liquidity flowing in to continue this growth in lending and thus home ownership.
It may sound like a bit of an idiotic question, but I think it is an important one. Why? I mean, you know, this, if we'd been sitting here in March, I think we would have all been saying, oh, this could be a bit difficult. Mm-hmm. The economy, not just in Saudi, but everywhere across the world is not doing well. There is no V-shaped recovery. We may have, I saw it as like a square root shape recovery, correct. But whatever shape the recovery is, we're all pretty confident that this dreadful pandemic is going to be with us for at least another 6 months. The impact on all of our economies is going to be challenging. But yet, in Saudi Arabia, your mortgage applications and processes are rising faster than they did last year when the outlook was much better. It seems to be decoupled from the underlying economic situation in the country. Why do you think that is?
Well, I wouldn't go as far as decoupled, because I'm very sure that if the pandemic hadn't happened, we would have seen even greater numbers.
Yes.
I'm going to, I would say, quote your interview with His Excellency and use some of his phrases, which are, I mean, they're on the spot, basically. One, he talked about, I think, the 4 pillars. The 2 that I'm going to focus on is accessibility to mortgages and the customer journey. Once you understand this journey, you enhance it, you improve it, you ensure that all stakeholders know it very well to make it smoother. The second element is technology. You see, now with technology, we've taken out 90+% of the manual processes that need you to leave your house, and you can basically find your house using the Sakani application, get your mortgage, actually see which bank fits you the best with the best rate, and just go and sign the contract. That has helped greatly in sustaining the numbers.
What about low interest rates? I mean, there is an argument that says that the fact that interest rates are very low, it also contributes to affordability.
Absolutely, absolutely. You see,
and increased asset prices too.
That is an excellent comment. And I'm in charge of financial sustainability, so I have nightmares about interest rates.
Which were going up.
Yeah. Currently, I'm living through a very nice dream because of the low interest rate environment. You see, the thing is, interest rates were not that linked in the past to the mortgage rates. Now, with more awareness, more, I would say, competition across the banking sector, the increased role that SRC is doing via its long-term fixed rate and making it a public number that everybody can see and know, and a benchmark for the industry, has actually helped drive and standardize interest rates by tenor as well. When all these elements happen, the lower VAT, so cheaper house, support from the ministry when it comes to providing supply, an automated seamless process with the citizen experience, a very strong and cooperative relationship with the banking sector, and segmenting the type of clients, the risk profile of each client, dealing with the concerns that our friends in the banking sector have so that we mitigate their risks. This all contributed immensely. So it was a perfect storm, so to speak.
Man, I bet you have nightmares about interest rates, but probably not traveling the same direction as Tariq. I mean, as a banker, one of the challenges across all banking, it's not to do with Samba or Saudi Arabia, low interest rates environments are not necessarily the best for the profitability of banks. You make your money on a not all of it, but a sizable portion on a spread. Could you perhaps talk a little bit to interest rates in terms of, how helpful is the long-term fixed rate from REDF? Has the change in rates this year been a challenge to you, or as you see it as an opportunity?
Okay, I will cover this point, and I will go and give you an idea about what we faced during the COVID-19.
Please,
okay,
yes.
The trend of resilient growth has continued even though we had the COVID-19 impacting the economy and the real estate market overall. And home financing still displayed robust growth, both in terms of number of contracts and volumes. In the first 9 months, we just finished the month of September, Saudi banks have issued 62% more new mortgages than last year. This has translated to almost 70% growth in contract values. With all that being said, Richard, it's important to highlight the role of REDF and the mortgage refinance. They've been the catalyst in igniting this growth that came from all the efforts that these institutions have made in unlocking the main challenges in the sector. They've been crafting a subsidy program to manage the customers' payment requirements through the interest rate subsidies. That's what we are talking about, and helping to unlock new customer segments into the financial sector through credit guarantees programs. So REDF, they've been the real ingredient to this change. Interest rate, going back to your question, if it's very low, we have to sell more. And we will add to our balance sheet more assets.
Simple answer. I want to take a question now because Mushtaq Parker, and if I think it's the Mushtaq Parker, it's great to have you here, Mushtaq. Here, he says the discussion is confusing. I apologize for that. But essentially what he's talking about, or the question he's asking, is the difference between conventional and Islamic. Do REDF, does Samba distinguish between those two types of mortgages? I'm never quite sure what constitutes an Islamic bank in Saudi Arabia anyway, but I was once told by, I think, a Sama governor that all banks in Saudi Arabia are Islamic. But is there a real fundamental difference in terms of product between an Islamic mortgage and a conventional mortgage? And if so, what's the sort of general balance in the ones that are issued?
Can I, even though it may sound strange,
you can answer it. Anyone can answer it.
I hope you will forgive me.
I'm flailing a bit.
Couldn't resist. First of all, just to clarify things, all the mortgages we are looking at and working on are Sharia compliant. Now, what we call mortgages take mostly two shapes or forms, contractually speaking. They are either ijara contract, and ijaras are more or less a leasing contract. The bank buys a good chosen by a customer and rents back the property to the occupier. And when he has finished to completed the payment of the lease, the property is transferred to him. And you have murabaha contracts, which are contracts whereby the borrower chooses the property, he receives the financing from the bank. With the financing, he buys the property, and the bank has a pledge. Strangely enough, so that's the two type of contracts you find across originators in the kingdom.
And those contracts are certified by the relevant Sharia boards?
They are. Well, actually, it's even better than that, because SAMA has produced template for both type of contracts. And then beyond that, obviously, every time normally all the banks, all the originators, ourselves as refinancer, the product are checked by the respective Sharia board, and the product have to be compliant with Sharia prescriptions. And the only thing I wanted to add at this point is, strangely enough, when you come from the, let's say, non-Islamic world, the closest profile of what we call mortgages in our background are the murabaha contracts. When you buy a property in London, usually you buy the property with a funding provided by your banks, and the bank has a mortgage on the property. The bank doesn't own the property, which is what the Hijara contract is offering as an alternative to the banks. So under the mortgage definition, we have two types of contracts. Both of them are checked according to Sharia prescriptions, are compliant with SAMA's template contract, and have a set of rules that have to be applied by the lenders.
Okay, so we're 100% Islamic mortgages.
On the mortgage side, as far as I know in the kingdom, but then I take a risk. I talk under the control of Tarek and Man. My answer is yes, unless there are some corners where we don't.
The vast majority of the market is going to follow SAMA's structure. Both Tarek and Man are nodding, so
Yes.
we're on the money.
Thank you, guys.
Yeah, well, that's what I thought. But you know, Mushtaq, who is he's putting another question in. I'll have to wait for your second question, Mushtaq. Mushtaq, a very distinguished commentator on Islamic finance, was asking the question, so I thought I would ask that. Now I've sort of slightly lost my direction here. Tarek, I want to come back to you and try and sort of bring in the wider story of SRC. But what is the relationship between REDF and SRC? I mean, you're both part of what Fabrice called the ecosystem. But do you, as REDF, want to see and have responsibility for the development? Partial responsibility for the development of a secondary market? Is that critical to you in the way that you see the future?
Yes, and let me explain. As Ma'an said, in regard to the target set for the ISCAM program, we're actually almost at 60% right now, which is the objective by end of 2020. And we strive to get to 70% by the end of 2030. Now, we've done relatively well in terms of the primary market. I mean, the numbers are big and we expect them to keep on growing because there's a huge demand and people need houses. Now, for this journey to continue and for us to have a full 360, this is where the relationship between REDF and SRC comes into play. SRC then goes to the banks, obviously, and purchases these mortgages. This provides liquidity for the banks. And then SRC goes to the capital markets and securitizes them. For us, REDF, what this means is more liquidity within banks, more loans for citizens. On the other end, obviously, as far as securitization goes, this maybe leads us into a very important topic, which is potentially issuing mortgage-backed securities in the capital market that will basically allow retail investors, institutional investors, to also gather or get some return from mortgages. Mm-hmm. Because this risk return profile actually of, let's say, lower mid to mid income on a relative note compared to equity and bonds, for example, is not really available as an option in the Saudi capital market. And this is something that would probably gather a lot of interest.
Fabrice, why don't you talk to that? I mean, a little bit about, let's talk about the PPA transaction that you've done. So is that the first example of a large scale transaction that might be securitized? I know I don't want to draw you to say something you don't feel comfortable with, but you know, the word securitization has been mentioned a number of times. We're Euromoney, we love securitization. So where are we with that, I think is the way I'll put it in a delicate fashion.
Okay. Well, to come back to your point, I think it's independent of the PPA transaction. PPA transaction is one stone contributing to the build-up of the secondary market and what we'll have to issue. Securitization will come into play at one point in order to address the liquidity and to drive in back towards the kingdom liquidity, either recycling internal and domestic liquidity available, but obviously giving it access to a liquid paper, rated paper, and all the positives of a securitization process. And more importantly, I would say, almost more importantly, it will probably drive liquidity from international market. The reason being that the big benefit of mortgage securitization is that we are talking, it is a benefit and sometimes a constraint, but it's a product which is well known, for which you have plenty of benchmarks across the world, in G20 country, in emerging country, with for a process in terms of engineering, rating, value assessment, which is well known by investors. So there are a lot of benchmarks, and you know what you have to do. You know what are the level of disclosure, structuring you need to reach. On the other hand, obviously, it creates expectations. So you can't really imagine creating something that would be called securitization, but on which you wouldn't have a certainty in terms of legal contract or the appropriate rating, et cetera, because there will be too much of a hiatus between what the investors are accustomed to and what you are delivering. Mm-hmm. So the way we view it is, and actually it's, there is a kind of a sequential process as put across by my friend and colleague Tarek and Mahan. You see the primary market has developed very quickly and very significantly since the end of, let's say, Q4 2019. And the numbers are staggering. I would just add at this point, to complete what was said before, one of the few elements around the dynamic in the market, even at the moment, is the demographic trend, the need for home ownership. I met a lot and I saw a lot of investors sometimes expressing some concerns about the speed at which the market was developing. I just told them, take a step back and think about where we are starting from. We are not in the UK, we are not in Italy, we are not in the US, and we are talking about moving the needle from 60, 70%, or let's say 40% or 60% leverage of GDP in terms of mortgages and the product which is well established. And if you have 1% increase, it's already almost unheard of and a miracle. Here we are starting from very low ground. Pre-2017, the market was very small and it's still relatively small. The last report from SAMA, you have 250,000 mortgages originated as an inventory across all the banks, leaving aside the past REDF, etc., for a country of, let's say, all things taken into consideration, around 30 million inhabitants. The speed at which the primary market develops is the fuel for the secondary market. If you have a very small market, very confidential, and so on and so forth, the ingredients for the secondary market are not there. And as rightly pointed out by Tarek, now that we have a primary market growing, it will percolate towards the secondary market as the balance sheet of everybody are increasing, the need for the liquidity are coming. We will see the movement towards the development of the secondary market. And in the development of the secondary market, securitization, or I would say structured finance, is one of the many tools we can tap or rely on to keep fueling the liquidity that would be needed ultimately by the primary lender. So securitization, yes, is very much on the map. It's one of the raison d'etre of SRC, which was created, as I said, to mimic Fannie, Freddie, CMHC, and so on, and all big advocates, proponents of securitization. So we will go there, but obviously there was no point developing the product before even the market would express some need. We had enough volume and so on. So it's coming.
You need some supply before you can sell the product.
Exactly.
Well, yeah, you do now. Anyway, you may not have done it in 2007, but you definitely need some now. Man, I have two questions for you. The second is on securitization, or you know, the relationship between the banks and SRC. The first is a little bit more prosaic, but is you know, all of the banks in the kingdom are relatively new to the mortgage game. How do you differentiate yourself? How do you compete? How do you, what are the basis on which the customer chooses to go to Samba rather than another bank? And second question, when do you feel that the banks will be ready to begin to move portfolios off their books and into SRC?
Okay. First of all, why would the customers come to Bank X, not Bank Y? First of all, the speed and the price. So if you're offering competitive price for the customers, fixed rate, the customer definitely will consider you, and the time of the process, whether it's within the turnaround time, whether 2 weeks, 3 weeks. Some banks are more than that. So, and whether the bank is covering different geographic locations. Mainly, banks are focusing on the 5 major cities. And we're talking here from a historical point of view, which is Riyadh, Dammam, Mecca, Medina. But now they are getting into the southern area, the northern area, and the central area as well.
Good point. Yeah, I hadn't thought of that.
Okay.
Yeah, we've got to remember, for our international viewers, Saudi Arabia is a jolly big country. I mean, we all forget that. There's these huge areas down in the south and the north, which are outside that sort of central belt of main cities. Sorry, I interrupted you, man. Please continue about that.
People are shifting.
Talk about the securitization, the offloading of portfolios into SRC.
That's regarding the role of banks and finance companies.
Yeah.
Well, given the exponential growth experienced in the home financing sector, the market will at one point become constrained in liquidity and overall maturity mismatch challenges. This is where Saudi Refinancing Company will help unlock these future constraints, not just for finance companies, but also for banks as well. In 2019, SRC has refinanced approximately 2 billion riyal, and Mr. Fabrice can correct me, of mortgages. But we expect this to increase significantly in the future as it plans to increase capital deployment to purchase more than 20 billion riyal, reaching 5 to 7% of the market balance.
Okay, thank you very much. I think what we're going to try and do is take some of these questions, because we've got about just over 10 minutes left, and I did promise everyone we'd get to some of these questions. I can see some names of people who took part last week. I tried to answer their questions there. I'm not entirely sure who I should be addressing these questions to, but I want to ask Ayub Ansari's question first. The distribution of mortgage loans between under construction / vacant land plots and fully constructed houses. Tarek, I'm going to ask you, REDF support loans only to constructed houses, don't they? Or am I wrong in that? No, I'm wrong again.
Okay.
Tell me about Tarek, please tell me about what you support.
Well, that's an excellent question, because let me take you back to the comment I made about segmenting the market, working with banks. Previously, the majority of banks only gave mortgages to ready-made houses. They did not want to get into the development risk. Now, obviously, when REDF moved from direct lending to subsidizing, REDF used to help, I would say a big portion of people who received loans using the legacy model were self-constructing, which basically you would build your own house on your own time, get payments and so on and so forth. So when we first started, the majority of our numbers were ready-made houses. Currently, this year specifically, I believe that the self-construction is outperforming, if not equally performing, the ready-made homes. The reason is we worked with the banks, we developed other products, and basically if a house is being self-constructed, the land is collateral, so you're somewhat covered. Off-plan now is on the rise, because the key is, I believe that the word is, instead of building a house, you want to move into a community. We're trying to push for the awareness on the retail end with customers, and also emphasize the importance of this product with banks. Off-plan is seen as the future growth. It is basically where you're able to buy a home pre its construction at usually a better rate than if you buy a ready-made, where you become part of a community. And this is where and why we are pushing now to have a more balanced approach when it comes to our subsidy model. So to answer the question specifically, we were heavier towards ready-made in our early years. Now self-construction and off-plan are contributing heavily, if not even more than the ready-made units.
So when Sultan Al Medbal asks, when will we see the approval of off-plan financing? Now is the answer to that question.
Some banks now do offer, no, some banks now, and working with the others,
yeah.
Some banks now do offer off-plan financing.
Yeah, there we go. Sorry, I'm asking the questions. Man, I'm going to come to you now, and I'm going to start with this slightly trick. You know, always the question that people want to know, and is the default rate. We've got a number of questions on default rate. What is the mortgage default rate? And are there any mitigating actions by REDF and the banks? There was some questions about credit risk. There's some questions about foreclosure. As we talked about earlier, you know, you as the banks are making your own underwriting, your own credit underwriting decisions. You must see some of those numbers. First of all, what is the sort of extent of troubled troubled borrowers? And what, to your mind, is the process that you would go through if you felt that one of your customers was in distress?
Okay, the rate, it's very low, and we have no concern whatsoever at the moment. It's probably less than 2%, so this is very normal. And we offer rescheduling on these loans if we feel that the client will have any issues in the future. So it's all there. We have different solutions to this matter.
I mean, a foreclosure would, as it is everywhere with the possible exception of the US, be sort of last resort. It doesn't do you a lot of favors, does it? I mean, as a bank, you would rather that didn't happen.
It does. It's very minimal, and in the worst case scenario, you will sell the house. But we haven't experienced really a trend or even a big number of cases, and I'm talking here across all banks.
If I may add something to
Please.
what Man was saying, Richard, and mostly for the benefit of any participants calling from outside the kingdom. Sometimes there is a feeling that the legal process is very complicated. In general, we all feel on the investor side that the process is skewed towards or against the banks. So borrowers are always favored, etc. And it's complicated. Perhaps there is a hint of complication in the kingdom because of the Sharia compliance, etc. Mm-hmm. The reality to concur to what Man is saying is all the discussions we have had with banks, because obviously foreclosure and default is something we scrutinize very carefully in the assessment of the portfolio we are refinancing, are relatively rare. But there is a reason for that. There are two sets of reasons. The first one is when you look at the origination process in the kingdom, it has relatively or always been on the verge of conservatism or prudent banking. Mm-hmm. And it has been reinforced by SAMA rules about responsible lending. Without the kingdom having met the hubris of the subprime mortgage problems that other countries have faced, we are coming from a relatively prudent and conservative process in terms of lending, to which SAMA has taken the decision to add the responsible lending rules, which are giving a set of rules, ratio, to make sure that the customer can afford the loan. There are some experience here and there of loans that are a bit more, let's say, adventurous, I would say, but it remains relatively minimal when you look at the bulk of what is originated. The second thing is, the profile of the risk in the kingdom is very close to what you had in some US states before the crisis, and most of them since the crisis, and what you have and had even before and after the crisis in Europe, which is a general liability that the borrower has towards the lender. You can't walk away from a mortgage by simply handing over the key to the bank. and say, tough luck, if there is negative equity, that's your problem, that's not mine. Actually, the chain of securities and collateral organized around the mortgage includes what we call promissory notes, which is nothing more, nothing less than what you have in some contracts in the West, whereby a borrower, above and beyond the purchase or the foreclosure price of the house, is committed to the full repayment of the mortgage.
Yeah.
And this promissory note has a lot of ancillary benefit. It's something very, let's say, powerful. So very often when a borrower starts being late or delinquent, you start by waiving the promissory notes. And what we have experienced and seen across portfolio is people tend to come back to performing very quickly. And then you have just the hard defaults linked to people who really can't afford anymore the mortgage and so on and so forth. And that's where the renegotiation and so on and so forth can come into play. So
I mean, there can be all sorts of reasons why you, in the end, you can't have done anything to do with you, loss of job, change in family circumstances, etc. There's always going to be a level of
If I may add on what my colleague Fabrice just said, yes, banks are relatively conservative when it comes to lending, so that definitely helps with the lower default rate, and that's why the housing program has introduced the mortgage guarantee scheme. So the banking sector generally gives mortgages to a certain level of customer, people who are seen as more likely to have stable jobs, such as government and so on and so forth, of a certain amount of income. Some people were not captured within that. And this is where we worked with the banks and we've identified a potential solution, the guarantee program. So certain types of private sector jobs, for example, certain types of income, certain types of people in a certain age may not get lending because they're seen as having potentially a higher risk profile. Now, to encourage the banking sector to potentially take risk on these potential individuals or homeowners, what we've done is we've introduced a mortgage guarantee program whereby we provide a credit guarantee to the bank for the benefit of these individuals. Now, I brought this up just to put some context and numbers here. I believe the number of credit guarantees issued so far in the last 2.5 years is somewhere in the area of 70,000. And by the way, this guarantee scheme will become an independent company in the future. The number of claims that actually have been raised out of 70,000 within about 2 to 3 years are 4 claims. And that doesn't mean that they're going to get paid, by the way. That means that the company will study their claims. And these are seen as the second tier. They're not the top tier that the banking sector usually goes for. And I think this speaks volumes on the credit worthiness, how people value their house and home, how hard they're going to try to keep up with the payments, which makes it...
I mean, one of the things, speaking from the UK, I mean, people, it's a social stigma to have your house repossessed. It's less so in the US. At least it was in 2008, in the sense that, it was easy come, easy go. Drop the keys back, leave. We've all seen the Big Short and all of that. Is that the same? I mean, I would imagine it's similar in Saudi Arabia in that, you don't just walk away from that. There's a social element to it that says, no, you obligate, you've got to keep your promises. Is that correct?
I think I wouldn't want to attach a social stigma. I'm just thinking of somebody who owns a house where his kids live, his family lives. Yeah. And I'm sure that in the end, we're a close-knit community. You have relatives, you have friends that you may go to borrow just to keep your house and keep your family under a roof. And that's something that I believe most Saudis would gather around, help their friend, help their relative, but that's in an extreme scenario.
Yeah, of course. Sorry, I don't want to go, I'm going down a rabbit hole and I apologize. Fabrice, we've only got 4 minutes, so I need to fire these questions at you quickly. Are there plans to have institutions invest alongside of SRC into buying mortgage pools?
That's something we will be looking at, yes, at one point. I mean, liquidity for us is paramount. So we will diversify going forward. What does it mean? That means that at one point we may consider offloading loans in a whole loan format, or invite financial institutions, asset manager to purchase by Sukuk's representative of the loans, or we will offload the loans, as said, in a whole loan format in funds. So all the avenues will be explored. At the moment, we have a very progressive, let's say, process. But at one point, yes, that's something we may look at.
Okay, well, we're going to need to begin to draw this to a close. So I'm going to ask my final question to each of you. Same question. Man, I'm going to start with you. What does 2021 have in store for Samba? What are your goals in the mortgage space?
Well, the future, first of all, looks bright. We see a strong demand, strong partnership and commitments. And looking ahead, there are many headwinds facing the economy, banking overall. But with the guidance of SAMA and the support of REDF and SRC, we believe the home financing will continue to grow, and we will achieve our vision, the Vision 2030 ultimate goal of 70% home ownership.
I mean, I imagine it, you know, given the headwinds that we are all facing, that mortgage is a pretty good product line for banks in 2021. I mean, you know, they look like they will continue to grow where there may be stress in other areas. Is that fair?
Absolutely.
Well,
one of the key. Go ahead, please.
Sorry, Man. Go ahead.
Sorry, Man, please. And I'll go to Fabrice in a second.
Okay. Mortgage will continue to play a pivotal role in our asset gathering. I mean, we will continue the mortgage business, and we are pretty much engaged, and we don't see any risks going forward. Going back to the risk of the foreclosures, to explain to everybody if he's not from the kingdom, the low rates of default in the kingdom, because usually people buy their house to use primarily. So we will not have an issue of the subprimes back in 2008. So, and the housing prices are stable and holding very well as well. Yeah.
That's good to hear. Fabrice, 2021, I won't be, you know, I know you're not going to be drawn on specifics, but maybe you could give us a little feeling as to what you would like to see happen, what your main priorities are in the next year, given that we're in Q3 now, Q4.
Well, what is paramount for us is to be ready in terms of diversification of access to liquidity and investors. So we are working flat out at the moment on renewing our domestic Sukuk program and to proceed with an issuance in the coming, let's say, weeks. We have launched and we are finalizing the selection in an RFP for an international program. We are working with our friends from REDF and other stakeholders on laying down the foundation of securitization. So all this with a view, we have immediate needs, but we are looking a bit like chess playing. We are looking at a few strikes ahead of today to be ready. All the more so that without willing to sound, let's say, cynical, we see headwinds coming. We think that there will be some headwinds, not necessarily terribly negative and dramatic, but I think that liquidity will be becoming a bit more scarce, capital will become a bit more scarce, etc. All these constraints will lead most of the financial institutions, globally speaking, to look at what are their alternatives to monetize some part of their balance sheet, keep originating, keep making profit, but addressing some of the constraints that does entail. And therefore, I see more demand coming in 2021 and further on, and we need to be ready.
Well, there's a lot there, so we'll be keeping an eye on it. Tariq, we're going to finish with you for REDF in 2021. What's next? What are the targets, milestones that you have in your sights for next year?
Okay. To talk about the future, let me say how we see the timeline of the mortgage market as we speak now. Prior to 2020, it was still in infancy. It needed to be built up. It needed to be strengthened and stabilized somewhat. Post 2020, from 21 to 25, our goal is to have deeper reform, to drive the market towards maturity. And post 2025, our goal is to have a financially sustainable ecosystem with, I'm not going to say no government interference, but minimal government interference, whereby the ecosystem is somewhat complete. How is this going to happen? Well, higher private sector contribution. So our partners, the banks, and also the developers, more off plan, as that satisfies the demand for a community. And this goes back obviously to a better understanding of segments of clients, whether it's self-construction, off plan, or ready-made. And as Fabrice put it very well, liquidity needs to be increased, securitization, mortgage-backed securities that would help continue the trend of growth are very important to continue the momentum that we have now.
But you feel confident that 2021 will bring, similar growth rates to 2020?
Absolutely.
That's a
Richard,
great way.
We have 250,000 mortgages reported by SAMA Q2 2020. We have 21 million Saudis, 30 million more or less inhabitants. The numbers were highlighting 1.2, 1.4 million homes needed to fulfill the 70% home ownership for the citizens by 2030. So whatever the hiccups, the bearing is absolutely clear, and we are all running and rowing in the same direction. So
well, I can certainly see that, and you know that I've been working in this market for, peripherally for a very long time too, and I watched the first stage of this market where literally nothing happened for 10 years, and then you did more in a month than you did in 10 years. So you're preaching to the choir, as we say.
In a bad month.
In a bad month. In a bad month. So look, I get it. I just, what I'm trying to do is get across.
We are unwavering in our resolute.
Well, we'll do this again next year. I hope we'll do it in the flesh. I'll play this back and say, look, what did you think? Anyway, I won't do that. Gentlemen, it's been a great pleasure having you all. Thank you very much for giving up your time. I really appreciate it. And I know that our audience, we're over the hour and we've still got 125 people. Our next session in this series is next week, and it is one of Fabrice's international peers. We're going to be talking to Seth Appleton, who is EVP of Ginnie Mae, which is not an identical, but a similar organization to SRC. We're talking to him about how the US market developed, learnings from that market, relationships with the kingdom, and more. So quite a detailed discussion there on the way that the international and the Saudi market are together. We hope you will all join us. I would like to thank His Excellency the Minister for being the patron of this series. I'd like to thank REDF and all of the people there who've worked so hard to support and make this happen. It may seem like there's just the four of us, but believe me, there's a huge team of people working incredibly hard internationally and from their bedrooms and kitchens across the UK to make this happen. I'd like to thank Samba for being our co-sponsor. We really appreciate that. It's important to have the partnership of a bank. I'd like to thank the Euromoney team as always. And I'd like to thank you, our 115 audience, for joining us and asking so many questions. You can see this again if you want. It'll be on euromoney.com/livestreams. And I look forward to seeing you all next Thursday, the 15th of, sorry, not next Thursday, a week on Thursday, the 15th of October for the next session in this series. And that is it. Thank you all very much and good afternoon.
Thank you very much.
Thank you very much for having us.
It's a pleasure. Always.